Around every month, I like to do a market overview where we look at take a macro view of the market and look at different data points and see how things are going. So that's what this video is going to be, just going through some of the data points I look at when trying to make, my investment decisions and trying to see where the market's going and how things are looking. So I'm going to walk through that and just kind of give some analysis, give some other feedback, and hopefully, it can it'll be helpful to somebody else out there trying to manage their portfolio by themselves. So here we go. All right. All right. So first, we want to start off with I saw with layoffs. I already got this pulled up. And for this, just trying to see are layoffs increasing or decreasing? What if there's like a concentration in a particular sector they're in? Taking a sweet time to do something right now. Okay. So these are like our scheduled layouts right now. I want to zoom out. View. Can we do more than? Okay. Oh. So since October, we're seeing the layoffs pick up. And then we're also seeing the warn notices go off. So like major companies or bigger companies, they have to announce that they're gonna do layoffs. That's what the warn notice is that announcement. They don't necessarily always end up being like what they announce, but well, I mean, like the total amount that's laid off doesn't always end up being like the amount that they announced. But just tracking the amount of notices that are coming out, it's useful just to see, if the direction that companies are moving into. So both of those are going up since October. Um, yeah. So layoffs not looking. I mean, they're not crazy. Like it's still, we're still under a high. Let me see if I can find a chart that goes back a little further than 2025. All right. So yeah. All right, 32,000 is about where we were. I don't know what this is trying to load. It's not doing anything. It's not doing it successfully. So all the way back, we're still under that 32 level for 24. Well, yeah, I don't know why I just did that. Let's go to 23. That makes more sense. Oh, is it not loaded? Oh, there's 23 layoffs. I'm not watching all these wig ads. Like, what? I don't know why it's not like really actually going back in time. Well, maybe it's going back in this chart and not on the graph. Let's see if this does anything. No. All right. So overall, from what we can see from the data we have, uh, layoffs are going up. We'll check and see how that's impacting, like the unemployment rate overall. Let's check out the GDP. I feel like we shouldn't really have an update on this because this comes out quarterly and it's a lagging indicator. So we might not have. Oh, we got something January 31st. Okay. Mm, it's disposable income, consumer spending, price index. That's probably another. That's another one of my data points. So that's staying flat. That's right along with the with interest rates. Um, I want GDP, not income. I guess these are like good overall. This is just the personal income, and this is the increase from the previous month, or increase or decrease. Um, so all those numbers are increasing, so that's a good thing. Um, but I want the GDP. Here we go. Oh man, guess I didn't click it. All right. So GDP slowing down a little bit. What do we have here? Uh, hmm. So consumer spending is up. Real GDP, current dollar. Hmm. All right. So GDP looks fine. Yeah, overall GDP looks fine. No issues there. Bankruptcies. So we're picking up. We're actually, we're getting closer to, um, we're getting close to like pandemic levels. Nah, that's kind of misleading. This chart, I feel like this is kind of misleading because we're only, well, I guess we're maybe like 55, 60% there. Um, of what we saw in 2019. But the thing to note is that it is going up. So, um, and then your chapter 13s are going up. How many chapter 11s we got in here? Chapter 7, chapter 11. Oh, 6,000. Oh, wow, to 9,000. Yeah, that's pretty bad. So the difference between the chapter 7 and chapter 11, um, chapter 11 is when basically you're forced to like sell everything you got to uh, to settle your debts. Chapter 7, you're able to reorganize, um, like just reorganize the business. That's the most common type. And if you a lot of times you'll hear you'll hear like when rich people file for bankruptcy. Um, it's typically like a reorganization type of thing. And then the chapter 13, those like your personal bankruptcies. So like these two are businesses. Seven, why did this go out? 7 and 11, um, like business um, types of bankruptcies. And then 13 is your personal, like individual bankruptcies. Um, but all those are trending up. So Just keep an eye on that. I don't think it's near. It's definitely, but also this is like during a once in a lifetime financial crisis. So, can we go back further than 2008? No. Um, so yeah, just something to keep an eye on. Um, let's see what else. But overall, it's not at it's not at like alarming levels. Unemployment. Just gotta pull that one up. Come on, bro. I'm not giving you no free feedback. Unemployment pretty much unchanged. Kind of been stable since what June 2024, right around 4%. So nothing alarming there. That's actually pretty good. Let's take a look at our household debt. So what these metrics are is kind of I have it. Something's in my eye. So I have it broken down across just the different parts of the economy. Like you have the businesses, so and now we're looking at consumers. And so if unemployment side, that means consumers, the amount of money that they have is going to decrease, and the spend is going to go down, all that. So these are just things that we look at to kind of gauge the health of um, the consumer. And of course, debt keep going up. Debts just keep going and going and going up. Oh Lord, trillions of dollars in debt. And so the problem with debt, when the debt's this high, is that um, people are just having to pay their people's um, people's disposable income is just being sucked up by going to credit card payments or the debt payments or whatever type of payments they have. Um, and that's not overall good thing. What we have here, inflation, still waiting. Yeah, I mean, yeah, we're not going to see any more rate decreases anytime soon. And that's so the increase in deflation, the increasing inflation is a little concerning, just because that's what the Fed ties the interest rates to. And um, I was looking at like recent uh like home sales, and it's down. Actually, let me like see if I can pull that up. And then credit card delinquencies are up. Look like they're leveling off a little bit, but you prefer prefer to see this number going down instead of up. And that plays right along with this number of just uh, debt going up, and people becoming more delinquent. Those are two bad things. Um, yeah, for the economy, and for consumers, which is bad for the economy overall. So what was I looking at? Oh, housing sales. So 23 is this is a forecast? I want a forecast. I want no cookies. Uh, so they don't. This one doesn't have the final number. Let me find one. Try to find one that does have it. There we go. So yeah, we're looking at a gosh. This goes back to we're looking at lows from from the financial collapse. So the housing market, those interest rates, they're just locking up the housing market. It's hard for people to, afford a home that they want. Um, so yeah, that's part of the issue with the with inflation. And then I guess while we're talking about inflation, that could get worse. So with y'all's president's deportation orders, you're deporting your cheapest labor force a lot of times with the undocumented workers, and you know that that just that's going to have a business impact. Uh, that labor is going to go up. Labor is going to go up, which means that the products and services are going to increase. Um, and if that's even if they're able to deliver on those products and services, so we can just see supply going down because there's no labor to move the supply. um, so that's a dynamic that we're waiting that I'm waiting to see, like how bad it gets. And yeah, that's you know it's just something to keep an eye on, because we dealt with inflation during the pandemic. And when it's the driver of the inflation is a labor shortage, there's nothing the Fed can do about that. And so they're going to hold the interest rates steady or increase them because that's all they know to do. And capital markets are going to suffer for it. So just something to keep an eye on. What else we got? I was looking at wages. I didn't talk about wages. Wages going down. Well, that's never good. So wages are down, trending down, or wage increase is trending down. Uh, and then interest rates. What do I do interest rates? Yeah, interest rates are holding steady, and they're going to be steady for a while until inflation cools. And with it rising, I don't see how they'll be able to justify decreasing it. So we'll have to wait and see on that. Uh, it's just money supply. Um, this isn't the best of charts, just because when you're living in a fiat system, they're always gonna print money. So this number is always gonna go up, um, as you can see. So I might even take that off, honestly. Um, so this is looking at quantitative easing. Um, what we want to see here is this going up. Well, I'll say for depending on what you're invested in, for more risk on assets, for crypto, stocks, you want to see when this goes up. That means that you're gonna be swimming happy. You're gonna be your market's gonna be lush with cash, typically speaking. So that's the signal that people look for. Looking at these, and right now it's going down. So we're waiting. We're just all playing a waiting game to see when this number starts to go up. Good old yield curve, the always reliable indicator of a recession, except for this past time when we didn't get one. Um, mm, it's actually pretty normal. It's yeah. Um, yeah, nothing to note here. When did it uninvert? Yeah, back in like September. That sounds right. So, um, in the past, like uh when the yield curve like uninverted, that was typically like a signal for a recession. But right now, the economy is in a point where that's just not the case. Overall, like most of these data points looked at are pretty good. There was a few red flags in the consumer space, particularly the debt and the credit card defaults. Um, we had increase in bankruptcies as well, but it wasn't at like an alarming rate. So most of this data, like I would say, it points to a strong economy, honestly. Um, so I know some people they're concerned with how um, how high the stock market has gone. Now let me pull that up, and that's I feel like that's a fairly legitimate concern, because the market has been just on a tear for so long, that it eventually does. You would think it has to cool off. Um, but for me, what I'm probably gonna end up doing is like putting a percentage of my capital back into the markets. No, it might be 50%, 60, 30. um, just dollar cost average back into the market slowly, like month by month. Um, that's probably what I'll do for stocks. For crypto, I'm probably just gonna. Now for crypto, I'm probably gonna because I pulled out like over the weekend when the first news of the tariff started. Because to me, like depending on how other countries responded, I saw that as more of a like black swan type thing. Didn't I don't think it's panned out to be that way. But it was a good time for me to take profit, and now it's going to be a good time for me to reorganize, or not reorganize, to rebalance my portfolio. Um, and so I'm going to do that, and um, yeah, so I'm looking to kind of correct my mistakes from, I guess, like the last quarter or the last two quarters, um, and get into positions that are, I guess, is more primed to appreciate right now in the crypto market. Right now, I don't think it's not really the time for alts. I'll say it's not time for like the micro alts. Like if it's under 100,000, not 100,000, 100 million, um, I would probably be a little weary of it. Um, and as it goes lower, closer to like 1 million market cap, I think it's just more and more risky at this point in time. Uh, right now, like I think the safest bet is your larger cap altcoins. Um, that's what I'm focused on. That's what I'm going to be rebalancing to. Um, so yeah, that's where I'm at right now. Um, let's see. So going over a couple of black swan risks. I make this just try to like stay abreast of things that could go wrong, and not be just totally blindsided. So pandemic risk, I'm gonna put that at like a 2 out of 5. It's not um, non-existent, but it's also it's picking up a little bit. Um, Prime example: 5 hours ago, experts are thinking or have concerns that the bird flu could become airborne. Um, so yeah, that's why I have it at a 2 out of a 5, just because this has been picking up steam for a couple of weeks now. What is this? No, no. Can I start out? We got captions because I have my computer sound off. And then there's all these airborne viruses going on right now. They don't like there's like a 10-day flu. Um there's like uh what is it, a something like ADV, or it's like three of them out there. So like pandemic risk I have at two. Natural disasters, I think that's something to with climate change, I think there's going to be a bigger and bigger issue as we go, and I feel like it's just a matter of time before it hits something that we just can't shrug off. Whether it's like crops burning and like the global food supply is impacted, um, or one of these hurricanes starts hitting server warehouses, or just something like that. I think with the two hurricanes we had last year, where they went all the way through, like North Carolina from Florida, reaching places where hurricanes don't ever go. Um, I feel like just the risk of natural disasters is just growing as we just march straight into climate disaster because we don't want to get off of fossil fuels. Um, and then I have a general overvaluation. That just goes back to what I was talking about earlier, how the markets are just like, they just been running along with no break, no interruptions. And eventually they're gonna correct. That's all there is to it. I have Trump. He's just so unpredictable, man. He weaponizes everything, and you know you you don't know. And then I think the biggest issue is probably going to be like the deregulation. We're already seeing plays into the airplanes. We're already seeing. I think there's been like four airplane emergencies since he took office. So yeah, it's just it's just not looking good. Those are probably like the two higher risk right now that I have. Um, Outside of the pandemic risk, those airplanes, and then like you had Boeing, planes crashing last year, left and right, and now all of a sudden, apparently, like we don't have good, we can't direct traffic to keep people from running into each other. I saw one with the plane engine was on fire today, so there's a lot of issues going on with that. But overall, I would say economy's in a pretty like strong position. Like I said earlier, um, so for me, I'm gonna go and dig through my list of where we at. Dig through my list of stocks, across different sizes, and just see what see what I feel like is going to be a winner. Also going to be looking at some of. Let me pull up a crypto. What's coin market cap? I'm gonna pull up. Look for some crypto projects to get into that I feel confident about while I'm rebalancing my portfolio. Wow, Bitcoin dominance at 60%. That's a lot. Damn. So yeah, I guess I'll do a crypto breakdown. Uh, following up to this one, and yeah, stay tuned. I'll post that soon, and y'all be easy. Have a good Black History Month. Oh, it's in the browser.